software here today, guys. So give it just 1 second to make sure everything's working. Hopefully, this works out. Nice. Cool. And if you're in, let's see, if you're part of the others, let me see if I can just do this. See if I can send it to the crew. Hopefully, get some guys in here. We'll see. So, guys, give me 1 sec. Actually, while we're kicking this off, if you want to go ahead and send it out, send the link out, retweet, what have you. You can find, where is the analyst chat? All right. If I see them pop up, hopefully we'll see. Ooh, look at that. Trying to reach out. Oh, Crypto Jaden, what's up, man? All right, I see ya. Nick, what's up? Yes. El Gringo, Patron. Very cool. All right. So I guess the chat is up on this sidebar here. This is kind of new. Interesting. What? There it is. Hey, buddy. All right, so I think we're all right. Just gonna give this just a quick second. I didn't really send a whole lot. It's been a slow week for me, actually. Wasn't really trading a whole lot last week, but back in action today. So, anyways, cool. Well, let's get this started. All right, Jesse's not gonna make it. All good. All right, so welcome, guys. If you're new, this is basically every Monday we kind of go through this, and yeah, they can see it all. Let me see if they can. Cool. I'll take the chat down a second. If you're new, just really kind of approach this like a business. So what I'm gonna do is just kind of look at some of the headlines. I know we're running like the the market is on a tear today. I'm looking at everything. I'm like, okay. I tried to go for a little pullback, and it was just like, you know what, this is way too bullish right now, and everything just, I'm looking at it. It's like still running. Like freaking semis are off the charts too. So much so I can't really hop on this one. Just feel like I'd be chasing so bad. But what a crazy open. Hopefully it's not a crazy turnaround Tuesday tomorrow, but we'll see. All right. So that's where we are. I think we got a huge earnings season last week. So let me coming up this week so we can get through. If you guys have tickers that you want to take a look at, go ahead and send tickers here. If you want to take a look at anything, we'll go ahead and hit those in a little bit. But anyways, before we get started, just got to point out options. We are options trading group, so we're going to go through some options, potential trades, take a look at some of the chains and maybe some levels that we're looking at for the week on the indices and on some specific stocks as well. So if you're new to options, just go ahead. Disney got it. Call 1-888 options before you start trading and get a copy of characteristics and risks of standardized options before you start doing it. So anyway, so recap. So typically what I'm doing here is I just, what are the main points of last week that we need to be aware of? It's still very much an inflation-centric market, huge inflation-centric market. Let me move this screen around just a little bit. So inflation is like the number one thing that the market, these new software that the market is looking at. And really, there was a couple things released last week. We got a negative print on one of the main ones. Let me just pull this up real quick. Negative print. I think it's CPI. Somebody can remind me. Last week, previous week, PPI. Oh, that's what. So negative print on PPI, which tends to be a little bit of a leader in the indices. Right after a negative CPI as well. So as much as the Fed wants to slow the market from just going on a complete bender. I think that's what we saw from a lot of the messaging that came out, and we're basically just Fed governors just trying to like keep the market calm and not just completely explode to the upside. Uh, Powell did have a speech, and essentially it was just like, hey, look, he's trying to focus on their core job, basically just sticking to stabilizing prices, and trying to keep with the messaging of higher for longer type of interest rates. And so that would look like typically about like well, it looks like about 25 basis points uh, next month, and I believe the market's still pricing in about 25 basis points for the foreseeable future until we get to late next year. So if we get something like a 15 basis points on the first, that would be pretty bullish, and I would assume the market would probably run from there. Um, Philly Fed Harker downshifts, so he was calling for 50 basis point. Bullard's calling for rates still above 5%. We're currently at 4.25% to 4.5% right now. And then, a couple articles about, hey, we're talking about terminal rate and getting the rates to neutral, really. So usually you'd be thinking, okay, if inflation is at 5%, then we'd want to have interest rates about 5%, and that's neutral when they're equal to each other. But we'll see. I think the real debate is how fast will inflation pull back and how fast will it come down. Huge China reopening. I think FXI and all the China names have been just on a complete tear recently. One thing I did note was like their growth rate. So it's a reopening play, but the growth rate is still pretty low in terms of most of those companies. Oops. There you go. And more job cuts. So Microsoft announced a 10,000 job cut, which actually was pretty bullish. They didn't have a lot of price action on the announcement itself, but this morning when I looked at it, let me just check again. They were pretty bullish. Oh yeah, tagging 245 again today, but still just a big battle. I got to be honest. I mean, everything's pretty much battling its 200-day. The SPY's battling its 200-day. So I'm a little hesitant to jump in a lot of trades one way or the other, tending to fade the rallies and buy the dips at the same time. But I think one thing I am staying bullish on is oil or oil services. So to me, with China reopening, we do have a little spike in the oil market. Let me pull up CL for crude. It's about 75 right now, but was trending about 80. But I think if China does continue the reopening trend, then I believe oil services will continue to keep their bid to the upside. So that said, let's go ahead and hop in this. So I think I want to do a really quick recap. So this I have set to, let's go to previous week and we'll take a look. So retail sales was an interesting one. So this one last week was the second down quarter in the row. CL, not Colgate. You're right. I hate when it does that. Good catch, man. Oh yeah, CL 82. Much better look. That's more like what I was thinking. So retail sales month over month dropped twice in a row, and we can pull this up, but really, retail sales never really had a negative 2 months in a row. So to me, that was one I do want to keep an eye on. With the market kind of booming to the upside, it's very tough to pick a short here, and if you do, it's like you got to be quick on the exit also. And the X auto. So there was one thing. So retail sales, typically there's a headline number and there's an X autos number. I was thinking that auto sales would decline, but then this morning on news, I was just hearing a ton of stuff about, okay, well, cars and things like that. It's really not pulling back at all, and inventories are at a healthy level. All right, so we're gonna flip this off. How do I delete this? Block. And then there was a beige book. So I did want to get into a little bit of the beige book. So typically people don't get into the beige book, but I did make a couple notes really quick. And it was a lot of talk about what they're seeing is really just, it's continuing to see not a lot of economic growth, just kind of like unchanged, stable. Very, very little. But even in the beige book, they were saying flat auto sales, housing market soft, although tourism, uh, tourism is growing. And most of the notes in the beige book was concerns about servicing debt. So consumer debt, business debt, basically paying these new high interest rates for people that still have people and companies that still have or have been building a ton of debt. All right. So let's see. Cool. So Philly Fed, most of this I'm gonna run through. That's pretty much it. So it was PPI negative month again, right behind CPI, which was negative, super bullish. And then the Fed comes in and tries to have their kind of like messaging campaign on what to basically cool the market off. Today, we really don't have anything from an economic perspective. Tomorrow, we have some PMI. So, like, basically, anything under 50 here is kind of slowing, but this is the services PMI that most of economists and stuff are going to look at. So keep an eye on this one. If it comes in super low, it's probably not going to be bullish, and we could see that kind of like turnaround Tuesday. Mortgage rates fine, and I think so. GDP. This is the first. I believe this is the first AMR. Here. But let's go. So GDP on Thursday, that'll be a big headliner. And really, here it is. So PCE coming on Friday, that's going to be the biggest day of the week. So Friday could change everything. If PCE comes in low, so this is the real Fed core PCE here. This is the real Fed index, the one that they're really, really watching. If it comes in super low, we could see a major, major rally. And we got some levels to the upside right now that I can pull up in a little bit. All right, CMR. He's in there, but he's got no video. You got audio though, Mar, if you're in there. And that's really it. So not a whole lot. Mostly PCE on Friday. That's going to be our biggest thing, and then GDP coming in on Thursday. But for now, really not seeing a whole lot in our way. Services PMI. I mean, I don't think anybody's expecting it to be coming in super hot or in a growth mode. So if it does, I guess that would continue this upside move. But one of the bigger things for sure is earnings. So we kick off earnings season. Well, technically it was last week, but I got 26 companies today, 45 tomorrow, 90 and 100. And I think, yeah, and 100. So next week we're gonna start getting in hot and heavy into earnings season. It'll be like 200 plus companies a day, not this coming week, but the following week. So keep an eye out on that. And then I think, by the way, GE is tomorrow for sure. So if anybody's in the GE trade, that one absolutely is tomorrow. I'm just going to do a quick view, and I use marketchameleon.com. It's kind of like OG, but it's free. And this will show you at least 1, 2, 3, 4, 5, 6, the last 6 quarters of moves. And so like what the implied move was, and then what the actual move was. So typically GE looks about sub 4%. So I'm not really concerned too much about this guy moving on earnings. To be fair, it might be, it's had a nice run. So maybe a little calendar on something like this. I'll take a look at that one. And then Daniel wanted Disney. So we're going to take a look at Disney really quick. And then Amar, if you have any charts that you want to look at, feel free. Let's hop through. So Disney has a ton of stuff. Wow. All right. Disney, my chart here, we have a nice little double bottom, like 1, 2, right around 87. I know this is like way past tense beyond. So here we are. So if you trade Disney, we know 125 has always been a pretty key level, or has been more recently. And that's actually way up here. So 125, I'm just going off memory. We're going to go up here. So you have this top right here and really this whole supply zone. So if you're long Disney, I'd stay long for now. So this would be like my ultimate target zone right around 125 if it can continue on this uptrend. This is months out, by the way. If we're just looking at this week, here's the first thing that we need to kind of deal with. So on this guy right here, we're going to have a fair value gap that we're coming into right about now, about 105. So if I want to continue it any higher, it's got to clear really this 108, 108, 109, which is this level right here. If it gets through that. It looks pretty strong, but you're just kind of pushing up against the 200-day. So it could check back a little and do this, but it would be a hard stop below 103. Let's see. I'd probably do a hard stop right here if I'm already in the trade. Something like this. Otherwise, if you get a pullback, this level, just over 100. Yeah, where you get this little double bottom here. And this little supply, just over 100 on a pullback would not be a bad place to at least look for a snipe. And then you have this kind of like top here. So at the 200-day, everything gets super choppy. That's why I'm kind of like avoiding a lot of trading right now, because you can see like all kinds of crazy stuff go down. Like it could just be like something this fast around the 200-day. Amar, is your audio working? You have to open your I can't hear you at all. Amar wants to look at Square. Square was booming this morning. Yeah, this is a little wild. Are you already in it? I'm sure he actually is. 76. Yeah, I have something similar. Here's your real fair value gap. That's a lot. So a 200 week moving average is what you're running up to right now at 80, 79 and change. I guess you could push up to 85, but it's just a huge, this is like everything else right now. It's a huge move. If it pulls back and holds that 76 level, that'd be a good, decent retracement. I might grab something like this. Yeah, 74.50 for potential pullback. No, I can't hear you. I got nothing. All right. Well, let's hang tight on this for just a second. So I'm going to do a quick index check. Right now, VIX trading around 19 and change. Again, I'm not super sold on this being something. I could look at vol Q, which is the NASDAQ VIX, about giving me about the same kind of rating. Super low. So I'm just going to pull up SPY really quick. I usually take a 30-minute chart. And just so we know, we're in this old kind of chop zone. So before this prior chop zone here, this was from November, well, basically till now. Technically, we put in a higher low, 387. So that's super bullish. We bounced right up off this lower consolidation here. As long as we can hold, really, I'd say like this, 393. That's going to be a pretty big deal. So let's do this. If I were to take a fib just from this low to that high, swing low, this one right to here, this would be 394.72 for a regular pullback. I do have this little broadening formation here that we're just testing the top of one more time. I'm going to take that down for now. And we actually have, there's a gap that's way up here, 417. It seems really far, but you never know. For now, we're right back in this chop zone. So this chop zone previously was from 390. What is this? 393, and it went all the way up to like 410. So this orange box here, this is an average week's range. If from the open, we just go a straight line up, it would actually take us right back to that 410 level one more time. And if we failed somewhere around here, I mean, geez, 2 days just back to that 390. As long as we can hold this level, and I say this level, here's what I'm going to do. So pre-market, we have this huge kind of like random wick, and that held. But this right here, what I'm looking at on this is I see some pretty big candles that are going to pop out at me. Let me get my right tool here. So this guy here and this guy here. So to me, this level right here, 391, let's call it 391. Let's call it right to the top of this guy. If we do get a pullback, I could see it going down to 391. But as long as that level holds, I mean, this should be super. That's super bullish for the rest of the month, at least. But we have earnings season. So one thing I do want to know, earnings season tends to be pretty choppy. So so this kind of, thing playing out, something like this, really could happen pretty easily and landing probably right where we started. So around 397. So again, I'm not inclined to chase this. Here's this level that we're just breaching right now. So this is prior double top 418 on SPY. As long as that holds today, we could continue up. But we have these two levels here to deal with. In our way, I'd say right about 403. And this last one at 409. So today, if we can hold this, we could probably get to 403. Tomorrow, if we're trading above 403, we could easily see 409. I would keep that as my Tuesday kind of game plan. Otherwise, if we're trading below this 400, right back to 396 and then 391 to the downside. I'm not ready to get super bearish. I'm kind of bearish on being bearish, if that makes sense. Yeah, I know you're trying to talk, man. I can't hear you at all. Sorry, dude. Nick nibbled at Yang. My GDX. So yeah, actually, let's do GDX. Yeah, no problem, Daniel. I think for Disney, there's a lot of headwinds right now, like to the upside. Honestly, I can see this one just being a slow grinder. I wouldn't necessarily take profits. If you're in an option trade, that's a little bit different. Here's what you need to be aware of: is earnings are on February 8th from an options perspective. Let's see. Let me take a look at your option chain. So February 10th expiry will capture, that's 43% IV. If you're in a short-term earnings run-up, that February 3rd expiration for a swing looks pretty good. And I see a lot of volume on the 105s, 106s, and 110s. If you're not a spread trader, those 106s look good to me. If you are a spread trader, that 105 to 110 call debit spread, paying 222 for the 105s and selling the 110s for about 58 cents right now, puts you at about $1.65. That's an okay risk reward. Max value on that's about the max value on that's 5. So 5 minus 165, it's about a 3 to 2.5, give or take, to 1. You'll never actually get the full value, so 2.5 to 1. Scott says Boyle. So this one totally caught my eye this morning. So UNG, actually, we'll go nat gas futures, was up in free market today. It was so weird. So we have this huge bounce right off this $3. And we know this thing has just been getting completely destroyed. But the question on Boyle, it's getting really interesting. So we have this huge support that was kind of lined up, but we're just below it. Typically, I would assume that we get some kind of like liquidity grab that we're getting right now. And honestly, this brings us to 320, give or take, on nat gas futures. That's about where I would probably pick my spots. But I what I don't know here is that I don't know that it's going to completely fly up just yet. So maybe something like UNG. I know Nick had some put credit spreads on. Probably the best way to play it, to be fair. And then this base right here, let's take a, yeah, so this is the base here. That's just a volume profile for that date range. Puts you literally on support. So today, UNG opened out of the gate, gapped up, pulled it back. As long as this holds right here, and this is Friday's low at 10.19, that should be it. So this would be the first real inside day on UNG. As long as we're not making a new low, this would be the first day that we don't make a new low. We'll probably have another day or two of chop, and then we're going to start looking for this level to break right here at 1086 for some upside. We'll be a little safe. We'll call it 11 just to be safe. But for now, as long as this is above 1018 on UNG, this actually looks okay. At the moment, it kind of looks like it might break. But below that, no dice. And this would line up with your Boyle, right? Yeah, Boyle, same thing. Huge gap up. What is this gap? I mean, from the close, pre-market, this was up 10%. They were both up about 10% and gave it all back already. So not quite ready, but definitely not dying just yet either. Yang. Nick wants to look at Yang. All right. Yang is, China bear. So this one's a little tough just because it is one of those bear ETFs or leverage ETFs. Sorry. I'm going to have to look at FXI. FXI is still it's still going, man. I can't. Like, you could do a little pullback, but this China play is just, it's pretty, I mean, it may have some legs. What's the one? I think we have Pinduoduo coming up. Earnings pretty soon. Let's see. Oh no, it's not for a while. So it's clear. This one I saw was high and tight. I think the other Baidu. Bob obviously has made a run already. Yeah, both of these in March. Chinese New Year yesterday too, by the way. BABA reports first February 2nd. So Pinduoduo, PDD, and BIDU would be two kind of like pairs trades or sympathy trades. Maybe look at something around there. Cool. Do you guys want to look at a whole lot today? To be honest, I just gotta go with the flow for a lot of this stuff. Let me see here. I'll pick this up. So this is this week we have Baker Hughes could be interesting. Let's see what that oil services. Little gap up, basing. All right, so they're not going to go anywhere. Logitech tomorrow. It could be like Synopsys, Paris Trade, Verizon, J&J. So Baker Hughes reported today. I think that's going to be, it was a nothing burger, probably similar what's going to happen to tomorrow for Halliburton. Tomorrow morning, we have GE. That's going to be one I'm definitely going to be watching. And then also probably J&J. Interested on J&J. These guys are selling off just a little bit. J&J. This is a definite calendar. This is an IV crush candidate. No question on J&J. What's implied move? 167.50. $4 implied move. Two and a half %, which is about what it averages. So we'll take a look. That's one. Kind of bearish on IBM. Boeing's run a lot. Tesla, by the way, Tesla earnings we have later on this week. Not typically a huge mover on earnings. Let's see. Implied move. About 10% right now. On average, this looks like about a 4% mover, -1. Somewhat of an outlier. It looks like Tesla could also be an IV crush candidate for sure. Intel's already getting some of the move. Man, the semis are getting the biggest moves that were just like blowing my mind right now. Oh, I have EQT up here. It was healthcare. So semis this week, the biggest move so far. I mean, this chart, we were looking at it not too long ago. I was like, on the daily, it was down here. I was like, why does this thing look so bullish when it was down here? And today, starting to break out a little bit. So semis could actually. So I mean, I'm like bearish on being bearish right now. Could see a nice little press continue to the upside. I mean, if the SMH continues up, some of this stuff to 254 would be my next level. This brings me to like NVIDIA almost tagging 190 this morning. Same exact chart right here. So if these break out, it could be kind of boomtown. Like this is 215 on NVIDIA. If you didn't have it, just to this prior consolidation zone right in here. So if semis continue getting up somewhere up here, even from 190 to 210, that's a good trade. AMD, very similar. A little bit lower down here. Definitely stuff to be on watch. But a lot of this high flying tech is what's moving, which is what's giving me a little bit of pause for concern. AMD had this little pullback, didn't quite get to that trend line I was looking for, closed the trade anyways, and here we are right back into this. So, man, this could, we're here. We are right here. 85. I might have to wait. Right now we're getting to a little bit of chop, but this momentum, I got to say, is pretty strong. So a little bit of chop zone here. You might take a little stutter step. Your 200-day isn't till 80. So it's got a ways to go for sure. Puts for a discount. Yeah, I did, but we'll see. Nike though, this was the one I was actually looking for on a shorts to the short side. This thing has had a huge run, and it's just coming into this prior consolidation one more time. So this is the level. If you have to pull it back pretty far, right in here. If today fails, this would be the first thing I'm looking at from a short-sided trade. And it can't so far, it has not been able to get up over this 130 level. I think this has been such a huge run from the bottoms down here. This is up like 56% from from the lows. If I just took like a very basic fib, even from there to there, 50% brings you back to 105. But really, it's this fair value gap, albeit an earnings fair value gap. I mean, that's a massive gap. Let's see. From a volume perspective, and we have one here too at 123. So 2 volume gaps right now running into resistance at 128. I think this could be the beginnings of a real major double top. So like I said, if I was looking for one to short initially, it's actually going to be right in here. Potentially something like that. So it could chop a little bit. I don't know if this trade is going to come out today or later this week. I don't want to be too early, but I'm thinking risk reversal here, probably selling the 130 calls and taking those proceeds, buying something like a 125 put for the downside, trading really just into this 200-day moving average right around 110. One more time. That's definitely big on watch. View on SPY. Just one more. Well, actually, we did SPY already. Where did my chart go? I'll just do it. So SPY, I think, if we continue up here and hold above this order block, I say order block. This is for Kapil. Right here. So as long as we hold over 400, I think we could chop around right now for a little bit. But basically, as long as we hold over this prior double top from last week, we could, just from an average week's range, see about 409 to the upside, which would put you right back into the top of this old trading range that we're basically just re-entering right now. So that's what I'd be looking at. And that'd be a trade for tomorrow, like anything above 402. That'd be for the back half of the week up to 409. But other than that, if we break down, we'd have to get down to, I want to say below. Let's do this. Let's just take a fib from today. Below 398. And I like that little fair value gap. So you have sub 400. I'm just going to put the volume profile on right now. So you have a little volume gap here that just happened when we pushed through this double top. So that should retrace, get you to about 400, maybe down to 399. But below 398, then you do have this second kind of shelf to trade through to this morning's open at 396. And then below that, these are very small chunks. Looks like from 395 to 393, then a 391. And 391 would be my, I can be a bull as long as we're holding this 391 level. And that's from this order block right here, Friday, Thursday, and Wednesday. Cool. Hopefully that helps. Momentum clearly to the upside right now. Can't believe IWM's coming in here. I'm not ready to take any new long trades. I am still long silver. I actually added a good chunk of equity there. I just like that bounce right off this fair value gap fill right here. One I haven't talked about yet, but might be looking at later. There's a silver miner, Pan America Silver. I used to trade a little bit. I haven't really done a deep dive into this guy, but this would be the one I'd be looking at next to pick up right around 1750. So I'm waiting on that one. But I like silver's action today. I didn't really see gold. Gold's still holding. So Pretty good. If silver can get any higher today, we got some pretty heavy fair value gaps to fill. I think we could get straight back there. Dixie was bouncing this morning, brought all these, precious metals down with it. So Dixie's still major watch here. The 2 year. The 2 year, give it a sec. 2 years been kind of bouncing. This is just that Fed speak right now. But the dollar index just basing. The Dixie doesn't make new highs and starts chopping down towards the downside, I'm still super bullish precious metals. So cool. All right, guys. I think that's it for right now. It's a quickie. I'm gonna hop in. I'll see you guys on some of the streams out there. I know we got. Let's do this. I got one thing Wednesday. So Wednesday, the whole Discord crew, and then some, will be live on Spaces Wednesday morning with me and Ace. He's gonna be co-hosting, and then make sure you guys follow Wolf too. His account. He's got the big schedule this morning, or every week gets out. So today, Power Hour, and then stock picking and market sentiment for the week. Tomorrow morning, AM trades. Wednesday, big day. Our crew hosts, and we run that space, and then kind of like midweek check-in is Wednesday PM. So we'll do a little midweek check-in watch list for the rest. And Sim and I are going to be trading, I think, Friday morning also. So give everybody a follow. Make sure you're there on Wednesday. That's the big one. And I will see you guys out there.